Welcome back to Alpha Recap. I'm glad you joined us after the close. Today we're unpacking a big day of tech tension. A headline route that rattled cloud demand paired with a tech response that could change the math on AI compute. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. There was a lot packed into today's tape. Some headline-driven fear and some strategic responses that matter for investors at every time horizon.
Let's set the scene. Markets closed mixed today, but the story that dominated conversation was Microsoft's massive sell-off, a move that wiped about $500 billion off its market value and sent people rethinking cloud demand. Walk us through why that single event mattered so much.
When a company the size of Microsoft gets repriced by that amount, it's more than a share price story. Market capitalization represents the market's collective view of future cash flows. A sudden downward reprice signals investors lowered their expectations for growth, margins, or multiples across the whole cloud cohort. Because Microsoft is so central to enterprise AI propositions, think Azure plus Copilot, a negative surprise there ripples to other cloud providers and to cloud-dependent software names.
That makes sense. It felt like the market was asking whether Azure slowing is an isolated event or a canary for broader enterprise IT budgets. The next piece of the day was a pushback from Amazon, not just in words but with strategy, custom chips to lower AI compute costs. Explain why that matters to the cloud demand debate.
Amazon's move is structural. Building custom silicon is a way to lower the per-unit cost of both training and inference on AI workloads. In simple terms, if it costs less to run models, more customers can justify running them. That reduces total cost of ownership for enterprise customers, increases price elasticity, and can unlock more volume. If Amazon Web Services can materially reduce compute costs, it could re-accelerate cloud adoption and help restore revenue growth and multiples for large cloud providers.
So the debate is really cloud angst versus chip-led hope. Fear that budgets tighten versus hope that cheaper compute grows usage. Where did the market land on that trade today?
Mixed. The Microsoft shock pushed risk off in cloud names and related areas, but the strategic narrative from Amazon injected a countervailing tone. If you can materially lower costs, that could be the catalyst for renewed adoption. Traders and analysts are split along those two lines. Some see the Microsoft move as a durable signal of slowing demand. Others treat it as more idiosyncratic and expect structural AI tailwinds to win out over time.
You mentioned analysts. BMO Capital weighed in with a notable macro view today. They published a year-end target for the S&P 500, 7,380 for year-end 2026, implying about an 8% return from here. How should investors interpret that?
BMO's number is an explicit, constructive anchor. It signals they expect continued earnings growth and fairly stable multiples into 2026. For long-term allocators and index investors, it's a useful benchmark to gauge whether current volatility represents a buying window or not. Just remember it's one scenario, a valuable input, but not a prediction etched in stone.
Let's turn to the smaller, quieter items that still matter. There was a bundle of Form 8K filings across financials, utilities, and pharmaceuticals. Names like OneMain, AllianceBernstein, WEC Energy, Suburban Propane, and LB Pharmaceuticals. Why do those filings matter to active investors?
Form 8K filings can hide both risk and opportunity. They often contain operational updates, governance changes, or exhibits that preview guidance. Active traders care because Item 2.02 and Item 9.01 can include results of operations or material exhibits. Item 7.01 and Item 8.01 can signal upcoming disclosures. Reading the exhibits is critical before making a trade.
Good practical advice. Now, I want to dig into the tech mechanics for listeners who aren't deep in the silicon weeds. How do custom chips actually reduce compute costs versus off-the-shelf graphics processing units?
At a high level, custom chips can be designed to optimize the exact matrix math and data movements that large language models and many AI workloads use. That means fewer wasted cycles, more efficient memory use, and better energy efficiency. The result is lower cost per inference or per training hour. The key questions for Amazon will be the degree of cost reduction versus standard GPUs, how quickly they can integrate the hardware into services, and whether customers will commit to volumes or pricing that capture the value for Amazon.
So, execution speed matters. If Amazon moves quickly and drives meaningful cost cuts in the next year, that could flip the narrative back to growth. If not, investors could keep a higher risk premium on cloud names. Let's move to governance, because that can affect sentiment too. Meta's board made a choice today that some saw as a missed opportunity. What happened and why does that matter?
Meta's board declined an initiative that would have increased investor visibility into certain decisions. With Meta approaching a near $2 trillion market cap, governance, and capital allocation messaging can materially affect momentum. Some investors view the board's conservatism as prudent, others as a missed chance to catalyze engagement and potentially boost valuation. It's a reminder that governance is more than corporate housekeeping. It can be a lever for investor confidence.
We also saw some partnerships and channel expansions. IBM's Partner Plus expansion, for example, and an ESG play from Piramal Critical Care around gas capture and recycling. Why are these smaller items worth watching?
These moves matter because they expand go-to-market channels and can create recurring revenue without big capital outlays. The IBM Partner Plus expansion brings more partners into its ecosystem, which can amplify adoption. And the Piramal partnership is an example of sustainability initiatives that can become differentiated service lines. Investors focused on ESG should watch whether pilots translate into commercial revenue.
Let's get tactical. For different investor types, what should they be doing after today's action?
It depends on your time horizon. Growth and tech investors should track high signal items, Amazon Web Services, price performance announcements, any Microsoft guidance revisions, and cloud usage metrics. If Amazon's chips prove they cut costs meaningfully, a tactical overweight could be warranted. Long-term allocators can use BMO's 7,380 target as a scenario to stress test allocations. It implies modest upside, not a blowout rally, so rebalance thoughtfully. Active traders should exploit the event windows around Form 8Ks, but only after reading exhibits and management language. Income and defensive investors should scrutinize utility filings for implications on dividends and distributable cash flow.
For listeners who trade on events, what are the most actionable items in those Form 8Ks?
Look for Item 2.02, which covers results of operations, and Item 9.01, which often contains financial exhibits or new agreements. Item 7.01, Regulation Fair Disclosure, can signal planned disclosures, and Item 8.01 can list other events that may move a stock. The exhibits often contain the most actionable detail, so pull them before making a trade.
We talked about cloud demand and compute economics. What are the core variables investors should watch that will determine whether the market leans into fear or hope?
There are three big variables. First, customer adoption trends. Do enterprises ramp AI workloads or pull back on cloud spend? Second, compute cost delta. How much cheaper are custom chips versus standard GPUs? And third, time to market. How quickly can providers integrate chips and deliver those savings to customers? If the answer to those adds up positively, the hope side gains weight. If not, the fear side stays dominant.
A lot of listeners will want a checklist. If I'm a growth investor, what's the short list of things to track over the next 12 months?
Track Amazon Web Services announcements on chip performance and price per inference. Watch Microsoft's guidance and any Azure usage metrics. Follow vendor commentary on customer deployments and pricing behavior. And keep tabs on major earnings calls for any changes in cloud cadence. Those items will give you early signals of demand trends and compute economics.
And for long-term allocators using BMO's target as a guide, how should they think about portfolio tilt?
Use the 7,380 scenario to stress test. If you believe the market will return about 8% into year-end 2026, you might accept modest upside and prioritize downside protection. Consider tilting toward high-quality cyclicals and defensive income if you need capital preservation. If you're underweighted to equities relative to your policy, this could be a time to rebalance incrementally rather than trying to time a bottom.
What about governance considerations after today? How should investors fold that into stock selection?
Governance can be a multiplier on sentiment. Look at board activity, capital allocation clarity, and how companies communicate trade offs. Meta's recent decision shows messaging matters. For many investors, governance scores and board engagement are now part of the fundamental checklist because they can affect the multiple investors are willing to pay.
We've talked strategy and checklists. Let's be practical. What are concrete next steps for listeners to take after this episode?
1. Narrow your information set. Focus on the high signal indicators we mentioned. 2. If you're active, read those Form 8K exhibits before trading. 3. For portfolio construction, run a scenario with BMO's 7,380 target and decide on rebalancing thresholds. 4. Maintain liquidity so you can act quickly if either the cloud worry deepens or chip innovation shows clear results.
Quickly, let's close with the three most important takeaways listeners should remember from today's recap.
First, Microsoft's $500 billion route recalibrated cloud growth expectations and created near-term risk in the sector. Second, Amazon's push into custom chips is a meaningful counterargument. Cheaper compute could re-accelerate AI adoption if executed well. Third, BMO's explicit S&P 500 target of 7,380 gives a constructive medium-term frame of about an 8% return, which is useful for portfolio decision-making.
That's a clear, actionable summary. Thanks, that helped sharpen the signals from a noisy day.
My pleasure. It was a classic example of headline-driven fear colliding with strategic execution. Investors who separate signal from noise and act on evidence will likely be better positioned.
All right, folks, that wraps our Alpha recap of the day. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll be back after the next close with more digestible takeaways.